Govind, let's address this issue with you, because Gayathri also talked about India and Bharat and that two-step strategy, and we just heard there from Rajiv talking about how there is a rural revival, again something that the governor also spoke about. I want to understand from you, what is going on in Bharat at this point in time, and how do you believe the credit gap that we just spoke of is likely to be bridged over the next few years?
So if you look at, last 2-3 years, especially, we have seen the COVID period and before that. So one point is whatever Gayathri mentioned, in all the interventions of Government of India and the digital part, whatever we have seen, it has made immense inroads and immense benefit to the rural India. I'll give an example, in fact, of my bank, though, in previous years.
And he's saying previous years because he's on the road to an IPO, so he cannot make any forward-looking statements. Yes, with that caveat out of the way, Govind, go ahead.
So if you talk about digital account opening today, for me, the rural India is 100%. Not even a single account is opened manually. But that's not the case in places like Bombay and Delhi, in fact. So there are different reasons for that. So I'm trying to say that, rural India has adopted the technology to the extent possible. And the type of UPI use, QR code use is so much in increase right now. So that is going to make an immense impact on the Indian economy overall. We have seen the resilience of the rural economy. In fact, in COVID-1, there were hardly any impact on the rural economy. In second phase, yes, the second wave, there were impact, but they really came back very fast. And we are seeing if you look at the day-to-day activities and especially the economic activities in the rural area, they're actually almost normal, in fact. And the cash flow has increased significantly. The activity level has increased significantly. The money flow has significantly improved, and the employment part has improved significantly during last 2 years' time after COVID. And even the repayment rates, which are very, very important, barometer for all these things, have significantly improved during the last 2-3 years. The biggest challenge for rural economy has been the operating cost, which all of us talk about that part. Because the ticket size being low, the distance is being longer, right. So it becomes at times challenging. The economy, this technology part is playing a very big role in that, and we have seen that happening. So my sense is, again, I can't make any statement that way, but we have seen during last 2-3 years that is clearly visible that in rural economy, semi-urban rural economy has actually is really growing fast and growing well. Okay. And growing in a very balanced way. That's also important. Okay.
So a revival underway, and digitization is aiding that revival in a big way and bringing down operating costs, which has of course been a big challenge. Would you concur, Mr. Venkatramu? Do you echo the kind of confidence that we just heard from Govind there?
Absolutely. There's no doubt about it. In fact, I would like to add that if you go back maybe 8 or 10 years, the way we've started with Jandan, see, probably we've gone in a very, very systematic way in terms of creating that infrastructure. First, we started with Jandan, where almost 46 crore accounts got opened, and then the DBT pushed through these bank accounts. So which means the first step of financial inclusion, what is required in terms of access to these services, and third most important, access to these banking services. Today, if you look at the kind of BC network that is available, either through India Post network or through other BC network, I think that has been very, very strong. So all of this have added in creating a physical infrastructure. And I would definitely add to one point what Govind said, that in these kind of areas, it has to be 100% digital. So what we've observed is that wherever even a small element or component of paper-based process comes in, that becomes absolutely unscalable. Okay. So if it has to be scalable, it has to be 100% digital. And the adoption rate has been phenomenal when it comes to this segment of customers. So it's more about leveraging this infrastructure and add more and more services to this is what can actually pave way for the future growth.
Okay, well, speaking about future growth and leveraging scale as well as future opportunities, what about your universal banking aspiration?
Okay, that's again subject to regulatory.
Of course, it's subject to regulatory approval. Have you put in your application or not?
Okay, as per the current regulations, it's not we're not allowed as a public sector entity. But we're trying to socialize through various policy making bodies and things like that. I mean, we're not stopping at least putting our efforts. We're trying to collaborate with various players in trying to at least create an environment where we can make this set of customers credit ready, because today, as Govind rightly pointed out, the cost of service delivery, especially when it comes to credit, is very, very high. How can we reduce that cost by utilization of technology, by utilization of data, and what kind of alternate credit scoring models that are required? I think there's a whole lot of activity which is required, and more importantly, it requires a collaboration of various players, not only traditional banks, maybe even non-traditional players. We have seen in case of UPI, how it led to phenomenal success, where a combination of both traditional and non-traditional players joining hands, and today we are seeing success in front of us.
Well, Mr. Tewari, let's talk about the road ahead now, and slightly more forward-looking. We heard, and you heard from the governor as well, that don't make poor decisions or bad decisions in good times, because invariably that does seem to happen. But at this point in time, bank balance sheets have never been stronger. The risk appetite, I would imagine, is strong as well. We're starting to see signs of private sector investment pick up, and if everything that we've heard from our panelists here this evening makes it clear that there is confidence in growth picking up from where we currently are. What is that going to potentially mean? Where do we see credit growth? Where do we see private investment? What are the signs that you're picking up?
Yeah, so you're right, the bank balance sheets are cleaned up over the last 4-5 years. Banks have made record profits in the last 1 year. Almost every bank is doing very good profits. And right, the governor did, we had a full day meeting of the entire board, public sector and private sector separately. And the theme was largely this, that you have to be cautious and be more careful about other areas, which so far, other than the NPLs, we have perhaps not paid as much attention. So things like sustainability, climate risk, those are some things Indian banks haven't paid much attention so far. So that's one theme. And of course, the other themes are around ECL and all, which are separate topics. Going forward, as I see, there are big opportunities. One opportunity is the climate finance itself. Now, with the targets which India has taken till 2070 and 2030, the interim targets, the opportunity till 2030 itself is around 30 lakh crores. Now, I say this when our balance sheet domestically, the loan book is about 28 lakh crores. So the entire loan book, we have almost we can double that loan book if we capture the entire opportunity. Of course, we alone won't do it. So that's one big piece which we have to look at, and it consists of myriad things like things as from EVs, the battery, the switching, the swapping technologies, renewable of course continues to be a strong play. Then going forward to the battery manufacturing, the pump hydro, all kinds of things. So I think that's one very, very big opportunity which all banks have and which we should start to leverage very quickly, because this is part of our national contributions and national commitments, and we actually need to do it for the planet itself. So that's one thing. The other, of course, is we heard about rural, and where the digitization and end-to-end digital for small ticket loans has made it grow very well, and therefore we see good growth, etc. But the opportunity, I think, we still have not leveraged very well, the banks especially, is the urban. The urban financial inclusion and the way we deliver to urban, because too much focus has been there on rural, rightly so, but I think India is urbanizing at a very fast pace, and apart from the urban infrastructure, which is a separate category where a lot of opportunity exists, but I think we need to take into account the more and more people coming to cities, and these are people with slightly higher earnings, just that they are not your typical salaried class employees in a good company, and how do we take care of those, whether through a BC model or through a MI5 model? That's something we need to work out. So that's another big opportunity which probably has to be leveraged. Infra continues to be very, very big opportunities as always. So the entire road building, the REITs and the InvIT models which are coming up, which are getting refined, monetization program, all of that continues to be a very, very big opportunity. So I think we do have very large opportunities existing for us as banks, and times look good going forward.
Times look good, and thank you very much, Mr. Tewari, for articulating very clearly those three big buckets that you just listed out in terms of future growth opportunities for the Indian banking sector. And I want to dig into each one of those with our panelists here. But Sanjeev, first cut to you on the back of what you are hearing from India's largest banks, both public and private sector banks, and of course NBFCs. Signs of confidence, signs of growth, and potential headroom for growth from here on.
Yeah, no, absolutely. But I don't necessarily want to take a contrarian view. But, if you look at the panel that we did just 2 weeks back, and we had a bunch of consumer CEOs on the panel, and what they told us was that growth was slowing down.
Yeah.
The credit hikes, the credit cost is now starting to pinch the consumer. So, to the question that we were asking earlier, I think it's definitely a good time from a bank standpoint. I think the fact that the bank's balance sheet have been cleaned up, the NIMs have been going up over the last few years, etc. I think they're all good things. But you know, I'm also slightly concerned when we look at the way the banks have grown their balance sheets, and a lot of it actually is driven by retail loans. Now, I mean, the economy needs to continue to be in good stead, and there are clearly certain areas that were identified by Mr. Tewari and others, which could actually challenge the economy per se, and because of the composition of the loan portfolio of the banks, that could be a challenge that they may face. And I'm sure, you know, the governor was referring to that and many other things. So I would say that yes, I think we have had because of the insolvency code, because of, you know, the credit of offtake hike, which Gayathri also mentioned, maybe the pent-up demand. I think we have had a good few years. And there are good reasons for us, because geopolitically, geoeconomically, India seems to be in a much better position. Services, captives, growing, manufacturing, you know, through all the production linked incentives, etc. There's a lot of good things happening, but there could be bumps ahead, and I'm sure the banking industry would be up to it.
Thank you very, very much for joining us here for the second edition of the CNBC TV18 PwC CEO Dialogue. From all of us here on the team, for now, goodbye. Thanks for watching, and we'll see you again shortly with another sectoral deep dive. For now, thanks very much.